Hi folks, this is Lee Gettess with the Market Sense for the week of November 2nd, 2010. That's election day. Hope everybody got out and voted. The charts we're looking at are from the Trade Navigator software. That's from Genesis Financial Technologies. In the bond market, bonds started the week off by making a high right in the 131.24 area, right in by this green line here, and turning down, which I thought meant they were going to at least test this low and find support at 129.12 and possibly even take out this old low and head lower below 129. However, they seem to have stalled in the 130.16 area, which is the red line here, and that means they might be targeting 132.20 or even 133.18. The tough thing about trading bonds this week is they're buffeted by so much economic information. I mean, you've got the election, but that's not a big deal to bonds, I don't think. Then you've got the expectation of what the Fed is going to announce, their so-called QE2. If they announce that they will be buying long-term treasuries, that should really spike the market higher. If the QE2 involves more short-term and not a lot of long-term bonds, then that could be disappointing for the bond market. And they no sooner get through digesting that than we get Friday's employment reports. A pretty difficult week to depend on your analysis in bonds, I think. Too many outside influences can nail them. In stocks, obviously the stocks have been going up for a couple months here, and they started this week by finding support right here in the 1175 area, and they've gone up and bumped their heads here at 1193. We have several daily highs in that range. So hard to know what they might do. There is a tendency, however, for stocks to have a pop after midterm elections. Doesn't really matter who wins. The tendency is just for a rally. And if they go higher, if they take out that 1193, you'd have to assume this old swing high here at 1206 would be the next target. It doesn't mean that has to be resistance. Doesn't mean they can't double top there. But I think the greatest likelihood is for them to kind of move vertical, go straight up and just sort of blow off into nothing. The price pattern for the last couple months here looks very much like the March-April time frame did here. So the way this pattern ended with a little increase in volatility and then a crack, you would expect this pattern to not end the same way. It's very rare that you see two patterns that look identical, consecutively like that. So this could be just a sideways pattern that tops this out. But it also, I think the likelihood is that they go vertical. They get really excited and go up and blow off into nothing and then kind of come straight down after going straight up. But that's just a guess. We just got to watch them and see what happens. And again, so much could happen this week. It's pretty tough to believe your analysis, but it sure looks like they want to go higher. And the tendency, again, is for them to do just that after the midterm elections. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in. We'll probably do this again next week.